Good morning, students. Myself Lohit Ramesh K. So, Assistant Professor of Commerce, Srimati M. Shivayar, Government Hospital College, Pagoda. So, dear students, the last session we come to know that what are the uses of national income. In this session, we will come to know that what are the significance or importance of national income estimates. So that means how it helpful for the country with its data of national income. Let us go with the significance of national income estimates. The first importance of national income is for the economy. So these days, the national income is considered as a social account of the economy. So these refers to the national income, net national income, and net national expenditure. So after deducting all deductions, we'll come to know, the country is going to get the income. So that is net national income. And the net national expenditure is the total amount of expenditure is taken spent by the government towards the general welfare of the public or towards the people. It's called net national expenditure. So which is ultimately equal each other. So that means net national income is equal to net national expenditure. So then only we can say there will be a existence of good economy or developing economy. So social accounts tell us that how aggregate of a nation's income, their main constituents are interrelated. So that means both national income, net national income and net national expenditure are interconnected and interlinked. They are interdependent. So based on the net national income, the net national expenditure take place for the upcoming years or for the next days. So it is important for the country that net national income and net national expenditure should be handled with care. Then the second importance area in which the national income helps us like that national policies. So while framing the national policies of a country, so the national income calculations as well as expenditure net expenditure calculations will helpful for the government like employment policies. So because of this, the national income tells us the figures about uh, the particular policies and sections. So it will helps us to know the direction in which the industrial output, investment, and savings, etc., are changing or moving on. So if the employment policy is good, so then it will be possible to bring a good industrial output and as well as to make more and more investment on industrialization of uh, economic activities, industrialization activities, as well as to provide more saving schemes to the people. But the employment policy is based on the how the people are having employment opportunities and whether the employment opportunities is generating and what are the measures have taken regarding the employment with the rules, salary, wages, everything, and as well as working hours, as well as so many things will considered while framing the employment policies. So the proper measure can be adopted by the government to bring the economy into the right path once if the government comes to know the national income data regarding the employment percentage of the country and from which sector the employment percentage is good and what they are contributing and what are the expenditure is taking is incurring for the employment policy or for the employment activities. Then the third importance of national income is that economic planning. So the data of national income pertaining or concerned towards a country's gross income, output, savings, and consumptions. So that means from overall activities, economic activities, what will be the income they are going to arrive accrued, as well as the output they are going to produce, and the savings they are going to make after producing and selling of the goods and services in a country, and what is the amount of consumption is taking place in the country. So as well as The national income tells us that different sources should be available for the country for the next planning. So without these, the planning is not possible. So the government can frame economic planning for the next years with the data pertaining to all this, that is gross income, output, savings, consumption, and different sources from where the government can get the income to frame the policies. Then the next important importance of national income is economic model. So here the economists propound short-run as well as long-run investment models in which the national income data are very widely used. So based on the data available from the national income calculation, they come to know that which plan is suitable, a short-run plan or a long-run investment model is suitable. So because the availability of income and the progress rate is importantly considered for the next plans. So if it is positive, then it will be good for to have a good plan. Otherwise, they have to make adjustments with to improve the existing situation. Then the next importance of national income is research. So that means with the help of national income data, there are also made use of by research scholars of economies. So they are going to use the various data of countries, like what are the inputs using in economic activities and what is the output the country get, and the income which is earning by the country, as well as the per capita income of the people, then the saving patterns and saving schemes which is going on, and the consumption level of the people, and investments made by the government as well as industrial sectors, then the employment activities, so which are obtained from the social accounts. So that means all this data is obtained from the social accounts. We already know that national income is considered as a social account, so that consisting of net national income and net national expenditure. So the research scholars may uh, find new solutions for the existing problems, as well as they help the government to form good economic policies, national policies for the future also. Uh, so for the research also, the national income data is useful or used. Then the next use and or importance of national income is per capita income. So here the national income data are significant for a country's per capita income. So that means the income earned by per head of a country. So which reflects in the economic welfare of the country. So the higher the per capita income, then higher the economic welfare of the country. If lower the per capita income, lower the per capita income, will lower the general welfare of the country. So per capita income calculation is very very important in order to measure the general welfare of people. Then the next importance of national income is distribution of income. So with the help of data of national income, we can come to know that wages, rent, interest, profit. So all these things relevant to the peoples only. So but from this we will come to know, we learn that disparities in the incomes of different sections of society. There will be, we will come to know there will be disparities. Similarly, the regional distribution of income is revealed. So that means whether the income is distributed to the region wise equally or not will come to know. So if it is there is a disparities among the regional distribution, the government can adopt measures to remove inequalities in the income distribution and also retain or restore regional equilibrium. So that means equality among the regions. Then the decisions to levy more taxes did increase public expenditure. So if there is a more distribution of income to the certain regions or places where the government can impose more taxes or higher tax in order to increase the public expenditure, Then it's also rest of the nation income statistics. So after discussing all these things, we come to know that national income play a significant role in distribution of income, framing the policies, and as well as extending the per capita income. Through that, then welfare of the people could be measured. So with this, I will have to conclude my session. Thank you. Good morning, students. And this is Lohit Ramaske, Assistant Professor of Commerce, Srimati Shivaya, Government First Grade College, Pavagada. Dear students, after knowing all the national income and its significance, uses, measures, difficulties in measuring, so we have to know what are the other things which through which we will come to know that how um, the national income and economy is working. So that this session consists the topic that meaning of GNP, GDP, NNP, PI, and DPI. So gross national product, gross domestic product, net national product, personal income, and disposable income. Let's go with one by one the meaning of all these things. So the first one is gross national product. So your GNP is the total measure of flow of goods and services at market value resulting from current production during a year in a country. So includes net income from abroad also. So it means the flow of goods and services at market value. So that means which are produced, the goods and services which are produced in a country, uh, the two traded with a market value. So that means the price which is prevailing in the market. So with that value only, the flow of goods and services are calculated. So which are resulted from the current production during a year. So that means only that current year's value is considered. Current uh, year value means current year's value of goods and services, and current year's value of market price is considered for calculating gross national product. It includes the net income from abroad also. The net income is the income which is come from after making all deductions. So the abroad means from the other countries if the countries received by by doing exports and imports. So that income is also considered for calculation of gross national product. So here the GNP includes four types of final goods and services. They are consumer goods and services. They are used for to satisfy the consumer immediate wants. Then gross private domestic investment. So that means it consisting of capital goods or fixed capital. So which form then fixed capital formation which is used for long term operations of activities or business activities or as well as economic activities, and the residential constructions in which it is considered as factor of production for goods and services, and inventories of finished goods and unfinished goods. So what are the stocks are the materials they are going to use for finalizing the goods or the goods which are unfinished. So all things are considered for calculation of GNP. Then the third one is goods and services which are produced by the government. So if the government is engaged in producing the goods and services with their own public utilities or sorry, public entities, so then the net exports of goods and services. So here the difference between value of exports and imports of goods and services known as net income from abroad. So in the previous slide, we come to know that in net income from abroad. So when the government is able to know the differences between the value of exports, that means which is exported from the country, and the imported uh, to the country. That means the number of goods and services which is exported and imported. The difference between them is known as net income from abroad. Then gross domestic product GDP. So GDP is the total value of goods and services produced within a country during a year. So only a particular year is considered to calculate the GDP. So within that particular year, the whatever the amount of goods and services produced and sold, so it is considered for calculation of gross domestic product. So and that too is calculated with market price. It is known as GDP. So here the one of the economists Dernberg defines GDP as at market price as the market value of output of final goods and services produced in domestic territory, means within the country during an accounting year or in a selected year. So that's known as GDP. So here there are three different ways which are available to measure the GDP. We already discussed all these things in measuring the national income. That is product method, income method, expenditure method. And a product method we come to know what are the productional activities take place in the country and income. So that means what are the income sources and from which areas or sectors income can be generated and the expenditures. So that means on what things the expenditure is going to be take place. So all this will come to know when we go through to measure the GDP with all three this. But these three methods of calculating GDP yield the same result. So that's why because national product is equal to national income. National income is equal to national expenditure. Then net national product NNP. NNP includes the value of total output of consumption, goods and investment goods. So consumption goods only used for consumption, investment goods are used to generate the income. But the process of production uses up a certain amount of fixed capital. So here, while producing the goods and services, they use fixed capital. It's common in business activities. Some fixed equipments wears out that other components are damaged or destroyed. So that means the equipments which are going to use, uh, they have they may be used or they may be damaged and destroyed, and still others renders obsolete through technological changes. They become obsolete or outdated, we can say. So only because they are outdated, only the reason here, the technological changes. Once technology is always continuously changing and improving from time to time. So the fixed equipments or machineries, the methods or techniques may be changed, they may be damaged, they may be destroyed. So all this process is termed as depreciation or capital consumption allowances. That means the changes take place in fixed equipments. So in order to arrive at national net national product, we deduct depreciation from GNP. That means we are going to minus the value of depreciation from GNP. So the word net refers to the exclusion of that part of total output which represents the depreciation. So in total output, what are the depreciation amount which is charged to make changes in the some fixed equipments, which is considered as a depreciation, that's going to be deducted. So NNP is equal to GNP minus depreciation. Then after that, personal income. Here, the personal income is the total income received by the individuals of a country from all sources. So that means if the an individual person is going to receive the income from many sources or from all the sources, but before making the payment of direct taxes in 1 year. So after receiving the income, so if that amount is reaches beyond the limits of taxable income, then that individual has to pay direct tax to the government. So before making payment of direct taxes, what are the personal income which is received by an individual from all the sources is called personal income. But the personal income is never equal to the national income because the farmer includes transfer payments. So here the farmer get the payments for his yields or the productions which is produced in farming land. So, but that will become transfer payments. That means without making any productive use. So it's the payments is going to be done for the farmer in the form of subsidies, also in the form of sold goods value. But some no, the total products of farmers is not used for selling. Some part of that production is used for self-consumption. So whereas they are not included in the national income. So the personal income is derived from the national income by deducting undistributed corporate profits, profit taxes, and employees' contribution to social security schemes. So these three components are excluded from the national income because they do reach individuals. So, but we can't measure in numbers how, in what percentage or after the what extent they are reached the individual. But the business and government makes transfer payments in the form of subsidies, pensions, allowances, and with different schemes like, and transfer payments from abroad also considered. So that is in the form of gifts which is received by the individual from abroad, and remittances, transfer of funds, windfall gains from the unknown sources or illegal sources, we can say, and interest on public debt. The government is also going to charge some interest on public debt, so which is also considered par for the government. Then, which are the sources of income for individuals are added to the national income. Then, DPI, disposable personal income. So, the whole personal income is not available for the consumers to spend on consumption. So, because the reason is that the out of income received, the individual have to pay the personal income taxes. So, uh, the in total income earned, some certain amount of money is going to be paid as in the form of tax by an individual. In the remaining amount only he has to dispose for his personal purpose or for any other activities. That means for investment activities, saving the amount, or so for any other which is required for that personal. See, but in personal income, we come to know that the person is going to receive the income by various sources, either it's by transfer by the government, transfer by the other people and other sources, and if it's incorporated with associated with the corporate profits, it is not measurable. So all these things are considered while deciding the disposable income also. So with this, I would like to conclude my session. Thank you. Excuse me. So here, when this amount is paid, the available income is very much reduced. So that I already told, that means in total available income, if uh, that individual pay the taxes, so that amount of is called as direct taxes, and the disposable personal income, the part of income which left behind after payment of direct taxes. So that means, suppose take for example, so if we earn 3 lakhs, if we pay 1 lakh tax, or the remaining amount is 2 lakh. So it will be called as disposable personal income. So here it is just an assumption only, not exact figures. So for understanding sake, I have given that example. So disposable income means, so after making payment of all taxes in the amount which is earned as income by an individual. So with this, I will have to conclude my session. Thank you.